When it comes to the Japanese market, you say in your notes that you do not necessarily see a compelling reason to go after such a popular market.
Well, we do think for the medium to long term, the outlook for the Japanese economy has brightened. There is a tangible progress here in many dimensions, and they will continue to anchor the market performance in the long run. However, there has been a pretty significant rally in the Japanese market, and part of it is driven by the weakness of the yen, rather unexpected weakness of the yen. We do expect the Bank of Japan to move either tomorrow or in the September monetary policy meeting, so that act could potentially remove one of the support for the dollar yen and also the Japanese equities. So this is the reason why we're slightly more careful about chasing that story for now.
Yeah, it's confounding because it feels like we've had very consistent messaging of caution from Governor Ueda and other policymakers, right? But when you take a look at this chart, looking at overnight volatility, you're seeing some parts of the markets pricing the BOJ meeting at the end of this week almost as though it's live, as though there are kind of expectations skewed towards some kind of announcement or tweak to policy. And at the same time, you're also seeing yen one-week risk reversals at the lowest since March 2020. There's a lot of positioning against the potential for a yen rally as well. So what's going on in terms of market sentiment?
We still think the markets are on the fence about the potential move by the Bank of Japan and the scope for appreciation of the yen. And in our view, this is actually an opportunity for investors. Obviously, in terms of communication from the BOJ, they've been very careful. But from our perspective, it doesn't make sense for the BOJ to communicate a move beforehand, especially when it comes to the yield curve control or any change to it. So it makes sense that they're very careful about it. And keep in mind that Bank of Japan, even after they make a move on the YCC, they can certainly keep the short-term rates low for foreseeable future. And that's kind of a fig leaf for the Bank of Japan to claim that they're keeping the policy easy, even after they tweak a bit on the YCC side, because it has been a source of discomfort for them and also for the cabinet. So in our view, the upcoming meeting tomorrow is a live one. If they don't move tomorrow, potentially they could move in September. Inflation has been running above the target. Wage growth is picking up. Service sector is doing very well. We think the context is right for the Bank of Japan to spring that surprise, and if so, then it's going to be a good story for the yen.
In the meantime, do you continue to chase, this fervent rally that we've seen across Japanese equities? Are we going to see more breadth when it comes to that rally, given so much of it has been focused on, certain areas like the trading houses, like the chip stocks? So within our neutral position for Japanese equities, we do have the allocation to Japanese equities, the standalone allocation. And for that, we continue to focus on domestic demand stories because that has proven a bit more resilient than the markets expected at the start of the year. And with the potential appreciation of the yen, they could actually add more to the domestic demand because the purchasing power of consumers would actually strengthen a little bit in real terms going forward. So, in terms of styles for the market, we continue to focus on a balanced approach to both large caps and mid-small caps, as opposed to simply focusing on large caps. And, we maintain that approach for now.